We have a quorum, so let's go ahead and start our meeting tonight. It is about 6:03, so we'll call the meeting to order. And do we have any requests for excused absences? Don't see anybody who's really absent, but so we have a roll call.
Mayor Martinez?
Here.
Councilmember Carroll?
Here.
Treasurer Baron Janetti? Chair Steve Cooley?
Here.
Member Richard Beneke?
Here.
Member Anna Olvera?
Here.
Member Biliath Bengesa?
Here.
Alternate member Andrew Forrester? Alternate member Thomas DeMasters?
Here. Okay, we have a quorum, so we'll go forward. So the first thing, or the next thing on the agenda is the Pledge of Allegiance. Stand with me. I pledge allegiance
to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Now, do we have any amendments to the agenda? Okay, we have one coming from the chair, and that is the second item, the appointment of a vice chair. We're going to table that and hold it till next meeting. Are there any comments? Anybody who? Okay, then we'll do that. And do we have any conflict of interest to disclose tonight? Okay, do we have any public comments that have been? Do we have anybody who's requested time for a public comment?
I don't have any requests.
Okay. So the next item is the appointment of an alternate member to the vacant Finance Committee and Audit Committee seat. And we're looking for a motion to appoint an alternate member to the vacant seat, and the alternate member who is sitting and willing to take that position at this time is Thomas Lee Masters. Do I have a motion?
I motion for Thomas.
Second?
Second.
Any opposed? Okay.
You want a voice vote, or is it unanimous?
Without any objections, I see it as being unanimous. Okay. And the next was the appointment of the vice chair. We're going to table that until the next month. And then we need an adoption of the minutes from our last meeting, which was March 4th. Do we have a motion to approve those, or do we have any discussion about those meeting minutes?
Move to approve.
Second?
Second.
Any opposed? Okay, that'll pass without opposition. Before it's presented.
Oh, sure. You do that if you want. You just do it at the beginning. Whatever works for
Okay.
you.
All right, so the next, had a little question about procedures there and what is allowed. So the first thing that is on our agenda is the audited financial statements for the fiscal year June 30th, 2018.
Yes.
Okay,
And tonight, we do have the auditors with us to do the presentation of the audit of the city, the single audit, as well as then the 114 letter, which is presented actually for council for tomorrow, but it's been included in your package. Before we get too far into some of the information, we had a short PowerPoint that we wanted to go over to kind of bring us to date on some of the things that we've been able to do since everything has happened here in the city. Not sure how to make it.
I can click it for you.
Okay. So the first slide that we have here, this is what this committee worked on for a long time. This is the SCO internal control checklist, where we went through all of the findings that the state of California had against the city, and we started addressing them one by one with processes, procedures, change in the way we had segregations, all of those different items, and we went through. When we completed this, it was presented to this committee in March of 2018. So it was a year ago when we were able to clear all of the comments on the SCO internal control checklist. The next one is from our June 30, 2017 audit. These are the internal control findings that we had that were still coming forward from previous audits. They've been color-coded. The lightest green are ones that have, the dark ones are the ones that have been corrected as of June 30, 2018. It's very hard to tell. The medium color green, those are the ones that will be corrected for a full year as of June 30, 2019, and the light green are the ones that will be fully handled by June 30, 2020. And this checklist, we also worked through with this committee on our different processes and procedures in order to look at each one of the findings and find the right way to handle each one uniquely for the city of Beaumont and make our internal controls as strong as we can, and we'll continue to refine those as we go forward, and we'll add more as we go. But this took care of the ones that were presented to us that became the more important ones to address first. So that kind of lets you know what we've been working on, not just the numbers, but how we get the numbers put together and how we're able to make it through to have the audits performed by the firms that have done them. And this year, same as for June 30, 2017, it was the Poon Group with partner Vanessa, who is here to Vanessa Burke, who is here to address the committee and go through the report with you. So if you don't have any questions for me, we can just start going through the presentation.
We're ready for that.
Okay.
Great. Is this on?
Yes, it is.
It is on. Oh, and I can drive it from
You
here?
can.
Can I test it?
You can.
Which way do I point it?
I don't know that it matters.
Not working.
I'm going to push in the right one.
Yeah, it should just be.
Okay, wait.
There you go.
Oh, I did
Okay.
it. I did it. I think it's because.
Oh, you did it?
Yeah.
Is the battery dead?
That could be also.
The clicker's dead. All right. It didn't work. That's my auditor sampling. Okay. Good evening, Mayor and Chair of the Audit Committee and other members of the Audit Committee Management. We're pleased to be here tonight. To my left is Andrew Roth. He is a senior manager with our firm. You're probably seeing his face around here quite a bit. He is one of our day-to-day on-site audit managers that's here during field work, and we'll talk a little bit about that. I've got a brief presentation. In your package, you should have 3 documents, the annual financial report, the single audit report, and then the required communications report. And so what I'll do is I'm going to go through the presentation in PowerPoint to kind of summarize all of that. I know there's a lot of information there. And then at the end, I will open it up to questions at the pleasure of the committee. You're going to run it. So you want me to look? Okay, I'm going to look to you when I need to have it changed. So tonight's agenda, what we want to go over is really just 4 different things within those packets. One is to introduce ourselves to you. I know many of you know us from last year. This is our second year, full year on the audit, and we are returning staff to the audit as a partner, and most of the engagement team, I think, was recurring this year as well. So we had 2 members that were also recurring on the engagement team, and then I believe we had 2 additional members that were brand new staff to the engagement. So we are pleased to have consistency, I think, in the audit between the 2 years. It's really helpful as we're getting to know Beaumont and performing the audit. The second is the annual required communication, and this is what's required by what we consider our operating procedures or our generally accepted auditing standards. And in addition, because you're a government organization, we have generally accepted government auditing standards. And so we have both of those that we're required to communicate certain items to you. So most of the focus of this presentation will be on that. Then financial overview, we're going to go over the annual financial report, and I corrected that last year. I think it said CAFR, and I know Todd wants a CAFR, but this is really not a CAFR for purposes of filing with the Government Finance Officers Association. So if you hear the term CAFR in the industry, it doesn't have all of those elements. That's an elective thing for you to do, but this meets what we consider generally accepted accounting principles for government, which is the basic financial statements. The fourth is to point out a couple financial indicators, and then we always like to talk about pension information. It's a hot topic in the industry. We're going to show you some numbers. I know you all have had the report, and you've probably seen them. So page 4. This is really the required communications. This is what is required under what we consider AUC. That's our codification of our auditing standards in Section 260. That's what governs what we're required to report to the Audit Committee or those charged with governance in order to ensure two-way communication between the audit firm as well as those that are charged with governance of the organization. That's the auditor's responsibility under GAS and GAGIS, as we just talked about, the scope, the timing of the audit, and any other information that we believe is useful to you or that you feel we need to communicate. Significant accounting policies, estimates, and disclosures. Any difficulties we've incurred during the audit, and we'll talk a little bit about accounting for the CFD refundings in 2018. Whether we've had any disagreements with management on the application of GAAP or other matters, whether your management has consulted with other accountants, and typically we call that opinion shopping. So when they engaged us, did they go out and shop for opinions or contact us in advance to say, hey, would you give us this kind of opinion and engage us under those circumstances? And we like to report to you that no, there were no disagreements with management and there was no consultation with other accountants. The other is we're required to communicate to you, as Milana just went over, reportable conditions and internal controls. Those are items that we deem to be, in our judgment, significant deficiencies or material weaknesses in your internal control. And then last is audit adjustments. And under the required communication, we're required to communicate to you any unposted audit adjustments so that you can understand or have an understanding as the governing organization what items remain unposted in the books. And we do have a few of those. But in addition, we went one level above that, and we are also reporting for transparency purposes all audit adjustments posted. So we'll go through this in detail. So our responsibilities under GAS and government auditing standards is that we are going to express an opinion about whether your financial statements are prepared by management with your oversight and that they fairly present in all material respects in conformity with U.S. GAAP. And in your case, the Government Auditing Standards Board, GASB, is your authoritative body for financial reporting. So we report your financial statements in accordance with GASB. Now, the fact that we render an opinion does not relieve any of your responsibility or council or management responsibility to ensure that those financial statements are materially fairly stated. Second, we are required to consider your internal control for purposes of financial reporting and compliance in order to determine our auditing procedures. So we take a look at all of the policies, procedures for your significant business cycles and processes, and we evaluate those in a risk-assessed manner where we look at the assertions that management has given us. And then we take that in, we digest it, and then we come out with our audit plan based on our understanding of the internal controls. Now, we do not undertake that for purposes of providing to you any assurance on the level of internal controls, but if items were to come to our attention during that understanding where we look at the design of the internal control process or the implementation where it may lead to a material misstatement as a result of fraud or error, we are required to report that to you if it results in a significant deficiency or material weakness. Last is part of obtaining reasonable assurance about whether the financials are free of material misstatement. We perform tests of compliance with laws, regs, contracts, and grants. as those have a direct and material effect. You'll see this year you have a single audit that comes into play obviously there's a lot of laws and regulations that you're subject to. And this year, different from prior year, you did meet the standard for the threshold for federal award of $750,000 and for testing for compliance of those federal awards. Again, providing an opinion on your compliance is not the objective of our audit. But we do provide negative assurance as to whether there were exceptions found. On our plan scope, timing of the audit, and other items, we actually perform an audit of all major funds and the aggregate of non-major funds of the city in the financial statements, as well as the component unit in accordance with GAS and GAGAS. I'll probably say that time and again. We conduct our audit in accordance with generally accepted auditing standards and government auditing standards. The report on the fair presentation of the financial statement is as listed below. You prepare a general purpose financial statement. You do not prepare a CAFR. In addition, our scope included preparing the single audit report for the federal awards. Management prepares the schedule. We audit the schedule. And then the fourth bullet, you'll see GAN limit, perform agreed upon auditing procedures and render a letter of compliance annually. We actually rendered that opinion at the completion of last year's because you had already done your GAN limit and your appropriation limit for 2018, and so we audited that and issued that report in prior year. So that was already complete, so we're not reissuing that report again this year. Again, this plan scope and audit includes obtaining an understanding of the entity, its environment, your controls, and that's really so that we have enough knowledge sufficient to assess risks to the organization of material misstatements in those financials, as well as fraud. And to help us in guiding the nature, timing, and extent of any further audit procedures that we're going to conduct in the field. And Andrew's the beneficiary of that, as well as Milana and Todd and everyone here. Just to be clear, material misstatements can occur from a variety of places. Generally, they're from error, financial statement error, fraudulent financial reporting, misappropriation of assets, or any violation of laws and government regulations can cause a material error in the financials. Our responsibility is to communicate to you reportable conditions. Those are what we deem to be significant deficiencies or material weaknesses, and we do that at the conclusion of the audit. So tonight is our night to do that. Further on plan scope, we can, if we see it fit, issue a separate management letter for improvements, just general improvements in internal control, accounting procedures, or other significant observations that we don't consider to be reportable conditions. We typically don't issue a separate management letter. We do have conversations with management through the process of the audit on minor things, but if it doesn't rise to that level of a significant deficiency or material weakness, those are the only ones that are required to be communicated in writing. We do, during the audit, meet with city's management. We've met with many members of those charged with governance, which includes the city council, some that are not sitting here tonight, as well as some that are sitting here. We look at city policies. We talk to you about your procedures, and we establish any specific requirements, and we have candid discussions. We exclude management from those discussions, and so we've had those meetings with city council. And if anything came out of those meetings, we've incorporated that into our audit process. We developed the audit work plan for the engagement, and we talk to city management about the items that are going to be required. We submit lists to them, and they provide a lot of data. And then the last is we go over fraud. If there's any awareness of fraud or knowledge of fraud or allegations of fraud within the organization, those are discussed in various levels throughout the organization, various levels within the departments. As we go through our audit process, it's often a common conversation to have for our staff to have at any point in time in the audit. We hold periodic update meetings where we've communicated audit progress ongoing. And then the last is just to communicate to you any other non-audit services that we've been engaged to do and undertake that we have set safeguards in place in order to prevent any independence areas within the audit. One is we do assist Milana in the preparation of the audited financial statements that you have in front of you. Including the notes and disclosures. We rely on her to have the skills, knowledge, and experience as a 30-year CPA to be able to take responsibility for that. And in addition, we establish other safeguards within our firm, which is that any review, any document that comes out of our firm is not only reviewed by me, but by a concurring partner, and also goes through our engagement quality control review partner. So it has a 3-partner review. And then Andrew also reviews the report. The other is we do assist Milana on the pension accounting entries. You're in the cost sharing plan and it can be confusing at times, so we do assist with those accounting entries. We do provide training to her so that she understands the nature of the entries and the final adjustments that come out, and I think you're clear on those entries. Yeah. Next slide, please. Audit timetable, and I know we're later than we'd like to be here. We're here on April 1st, on April Fool's Day. The audit is much sooner than last year. We were here presenting these same reports last year in final form in August. And I believe we presented draft, but before you tonight is, I was going to say April Fool's, it's not final, but it is. It's actually final reports. We've issued final reports. These are signed. There will be no changes to these report absent anything that comes to our attention subsequent, but they're final for all intents and purposes. For our audit, we conduct it in 5 phases. Planning, we do planning with Milana and the team and our team. That happens around the July timeframe. We combine it with the interim where we're actually coming in and looking at the policies, procedures, the operating environment, internal controls, significant cycles, revenue cycles, utility billing, a combination of things, a very elaborate plan. And then year end, we do that around the November, December timeframe. And then financial reporting happens around January and February. And then audit closeout really occurs during the March and April timeframe where we wrap up the final. We issue drafts, there's feedback, and two-way communication with management. And that includes in the audit closeout this presentation to you as governing body. So in the required communications, I mentioned at the beginning of the presentation is to discuss with you any significant accounting policies and estimates that are in the financial statements. We find that the 3 that are most significant within the audited financials are management's estimate of its investments and fair value, the valuation of capital assets, including infrastructure and related depreciation, and then the 3rd, which is your biggest liability, is your net pension liability. There are significant assumptions that underlie the net pension liability. That is actually through your benefits through CalPERS and CalPERS actuary, and we take a look at those assumptions as part of our audit in their actuarial report. If you were to read anything in the financial statement footnotes that I think are important, and there's a lot that are here, this is is really to take a look at note 1 when we say we look at your accounting policies during the interim phase. Note 1 summarizes the reporting entity as well as any significant accounting policies. For example, revenue recognition is one that is always deemed to be significant in any audit. Your capital asset accounting, your long-term debt is a what I would consider a structure that is not uncommon in California, but it takes a little bit of reading on the footnotes. That's note 6 as well as note 7. Debt without city commitment, the pension plan, note 10, any deficit net position, and note 11, or fund balance, any expenditures exceeding appropriations, your classification of your fund balances, any commitments and contingencies that the city has entered into, developer capital contributions. There is a special item in this year, a prior period adjustment, and then any subsequent events that we contemplated. So that's really, it's almost every note in the financial statements. I think the footnotes are an important read and well worth going through. We spent quite a bit of time on those. The last is to go over significant audit adjustments in the required communication letter. So everything I'm going through with you right now is essentially included in the smaller item that looks like this. And in the back of that, you will see there are 2 schedules. Attachment A is audit adjustments. And this is, what we're required to report to you is whether the city was in agreement with all of the posted audit adjustments that we proposed, and they were. and all of these have been posted to the books and are contained within the financial statements that you have. So if you consider, when we come out at year end, Milana presents a trial balance unadjusted to us. We perform our audit procedures, and then as part of those procedures, we propose audit adjustments. So attachment A are those. There are some that are to conform to the prior year presentation. So for example, the first entry is really just to adjust your workers' comp accrual to match your actuarial report. And I won't go through all of these. The second, adjustment 3 is to adjust your fund balance for your principal payments on your debt so that your fund balance can roll forward. Adjustment 4 is again a fund balance reconciliation item. And the reason those are important is because we look at last year's audit and ensure that she has considered any adjustments that were made in the prior year. Since you've been behind on your audit, it takes a little bit of time to get everything caught up. And so I think by next year, we won't see the fund balance reconciliation items because we'll be more synced up between the audit and the internal records.
Right. And part of that too is for the internal reporting, especially with our development impact fees, we have them reporting on a cash flow basis rather than the way that it gets reported in the audit. So when we went through it, we have audit adjustments because we have to change the presentation and shift the numbers in the way that they show up in the final audit versus how it is we're tracking them internally. And we've now got a worksheet for that the auditors won't have to propose that entry. We already have that ready to go. We can make that entry internally as a period 13 for fiscal year 19 and forward.
So, some of that, as an example, is a policy decision. You guys have made a policy decision that you won't move forward with a capital project unless the funding is in place in advance. And so in order to ensure that that's occurring in your internal records, Milana moves the cash from the developer impact fee so that it's set aside and ready to go for that capital project up front. But for generally accepted accounting principles, and when you look at developer impact fees under AB 1600, which is developer impact fee law, those fees are due back to the developer for 5 years until spent. So we consider them to be unearned and not recognizable in the current period. So we'll have timing adjustments between that. So it's for her internal, it's okay for internal tracking purposes that you want to pre-fund your projects like that. But for GAAP reporting, we're going to say no, and we're going to move it back out into unearned revenue, if that makes sense. So she's going to recognize the revenue set aside. We're going to keep it in unearned until it's actually spent on the project. That's when you actually physically earn that cash. And then the next item, item 7, journal entry 7 is 11.5 million. We will talk about that. That's the correction that I've got on a separate slide. The refunding, the CFD refunding. And then on same entry on the fund AJE 8 is reclassing the activity from 510 to 840. So some of that is just getting the debt into the right accounts from the internal books back to where they should be. So the last attachment there is attachment B, and I'm happy to go over any of the entries. Is really on the government-wide financial statements. You pay interest on September 1, and so there's an accrued interest portion that exists at June 30 of 2018, as well as at 2017. And so this entry is really contemplating the effect of accrued interest on the revenue bonds at year end. So you have 4 months of unpaid interest because it pays on September 1. Again, it's a timing difference. We look at the change between the 2 periods, and if you look at the total audit adjustment for revenue and expenditures, it's $43,000. And so we are fine leaving that on the unposted entries. Milana's told me she wants to book that as part of her closing process going forward. But we don't disagree that she's left that as unposted at year end. which I think Milana already, you kind of stole the stage on that one. Okay. So the next one is significant findings from the audit and the single audit. You did have 5 material weaknesses. I've put in there the status, and remember, we're auditing through June 30 of 18. So where Milana has a more current status because you're working on it, we're looking at the status of the internal control structure that was in place for the period from July 1 of 17 through June 30 of 18, and I know we discussed this last year. So many of the things that I may say are partially implemented, that's because it's how the internal controls affected the numbers that are in your book, okay? So if it was partially implemented or it's in progress, we could not rely on those internal controls for purposes of performing the audit. We would have risk assessed it differently because it hadn't been implemented. Now next year, since they've been corrected, we will contemplate that as part of our audit plan and our audit approach and determine whether or not we want to test and rely on these procedures as part of our audit. You had 2 significant deficiencies, the TOT tax and the overhead cost allocation for purposes of our audit. Again, these were all partially implemented in progress. The new is single audit. We audited the highway planning and construction cluster. It was $7.5 million of federal awards expended in the June 30, 2018 year. That's 97% of your federal expenditures. So we didn't test 100% of 97%. We sample, but during our sampling of the federal highway planning and construction cluster, we did not find any findings or question costs related to that major program. So your controls were in place. The next item is management's responsibility. Management and those charged with governance are responsible for preparing the disclosures, preparing the financial statements, and recording the financial statements. You're also responsible to present it in accordance with GAAP, and we talked about that being the GASB standards. You're also responsible to adopt sound accounting policies, establish and maintain internal controls over financial reporting and compliance, and provide us evidence supporting the amounts and disclosures in the financial statements. In addition, you are responsible for preventing and detecting fraud in the organization. So next we'll go over the annual financial report. So within the larger book that you have in front of you are multiple sections. One is the independent auditor's report, and that's the two pages, pages 1 through 2. And that's our responsibility, is to issue the independent auditor's report on the financial statements. And in our opinion, we indicated that the financial statements present fairly in all material respects the financial position of your governmental activities, your business type activities, each major fund, and aggregate remaining fund information, as well as the respective changes in the financial position and cash flows in accordance with GAAP in the U.S. That is what we would consider to be an unmodified opinion on your financial statements. It's the best that you can get. There's no better than unmodified. As part of that audit report, it includes management's discussion and analysis. I put that on italics, as well as required supplementary information. Please be aware that's unaudited information. That's management's ability to tell the story in lay terms on the financial statements, and really their opportunity. We do look at it, and we look at it for consistency, and often have questions and go back and forth to ensure it's consistent with the basic financials. The basic financials consist of your government-wide financial statements. Those are on a full accrual basis. Your fund financial statements, which are your major funds and aggregate remaining non-major funds, that's on a modified accrual basis. And then your notes to the basic financial statements. And then last is supplementary information is presented, and we do apply limited audit procedures on supplementary information. We already talked about the unmodified opinion and what that means. Estimates are reasonable. The significant accounting policies I talked about in footnote 1 have been consistently applied between the 2 years, and that your disclosures are properly reflected in the financials. And you're seeing in the single audit, and I know last year we didn't have a single audit, so you had a separate report on findings. But our firm's approach is that when you do have findings and we're going to issue a single audit, we already in the single audit have to report internal control findings over financial statements. So we incorporate them in there versus issuing a separate letter. So you did have internal control findings. We went over previously over financial reporting. We looked at the internal control over compliance over your major programs. We did not have any findings that were direct or material to that federal award as discussed. And then in addition, in the single audit, you'll see the status of prior year findings in the back of the book. And I'd like to say progress has been made, as you can see from the internal staff report. We will eventually get synced up where we're going to be reporting the internal control findings at the same time that you are. But I really applaud the efforts, and I believe the tracking mechanism that we recommended last year was helpful. So page 16, we're going to go through just the numbers on the financial statements. I won't reference the pages, but you can follow along in your book if you'd like, but we've reiterated them here. I do have one change to one of the slides. Page 16 is really the government-wide statement of net position. This is full accrual basis. This really presents the city's financial statements, including all assets, long-term, as well as long-term liabilities. You can see that the most significant change this year, as you look at this, is in your assets and in your liabilities. Your assets have gone down by about $99.4 million. Your liabilities have gone down by about $112 million, and much of that is due to the 12 refundings that you entered into in CFD 93-1. There was a refunding that took place. There are 12 refundings that took place, and as part of those 12 refundings, there was a call in defeasance of the associated revenue bonds related to the CFD refunding. So that's why you see the asset for the Beaumont Financing Authority come down, as well as the revenue bonds on $112 million reduction. Deferred inflow of resources, $3.9 million as opposed to $1.4 million. It's a change of $2.5 million. Those are all pension-related deferred inflow of resources, and that's as a result of changes in your actuarial estimates and adjustments. Down in your net position, you can see your net investment and capital asset has increased by $124 million. That's a result of the reduction of the debt on the Beaumont Financing Authority, because you've essentially purchased those assets and capitalized them, and in accordance with generally accepted accounting principles, your net investment in capital assets is shown net of the related debt. So as your revenue bonds were outstanding, we had to offset the capitalized assets, but when those got paid off in connection with the CFD refunding, the debt comes down, the asset net book value then becomes more positive. Accordingly, in the restricted, the assets that were there, that were the investment in the CFD bonds in the Beaumont Financing Authority as the CFD refunding took place, that CFD refunding, they liquidate the associated investment, and that's the Beaumont Financing Authority's investment in your own local obligation bonds within the district. So you see that change coming down. So the net change is about $4.1 million or $4 million. Your unrestricted net position went down from $13.6 million down to $7.6 million, and that you'll be able to see on the next page. So the next page is your statement of activities. The statement of activities shows all transactions from July 1 of 2017 through June 30th of 2018 as compared to the prior year. You can see your charges for services, operating grants and contributions remained relatively flat. You see capital grants and contributions went up by about $7.9 million, and you heard me speak earlier about your single audit, and we tested $7.5 million of federal awards related to your federal highway planning and construction cluster. So you receive capital grants for that. So that's the increase. It's a one-time for the Potrero interchange. Your expenses have remained relatively flat on a government-wide basis. Again, this is full accrual, $250,000. So you see your net cost of services went down by $7.2 million related to the grant. You can see general revenues and transfers went up by $13.3 million, and $12.1 million of that is related to the recognition of developer contributions for construction activity that occurred during the current year. And if you think about full accrual financial statements, when you incur the developer contribution, when you're recognizing it as the asset is being constructed, the asset is getting capitalized and expensed over time through depreciation charges. So they won't match 100%, but over time, they would recover. The last item is special items. You see $11.9 million in the current year and $3 million settlement in the prior year. The $3 million settlement in the prior year was the LV Heartland settlement. And in the current year is the transfer of the cash with the fiscal agent related to, as well as some pooled cash related to the CFD 93-1 refunding. So some of the city's pooled cash, as well as Beaumont Financing Authority's cash held with fiscal agent, where you had reserves, were pulled into your refunding transaction for the district refunding. And so we see that transfer going out to the agency side for the refunding purposes. Next is your business type activities. And so this is your sewer and your transit fund. And I do have a correction on the slide. I apologize. The 2017 I didn't catch. I left the 16, I believe, there. It should be $130,758,000. So your change between your years is $10.1 million. Most of that, $4.6 million, is related to net income in the current year, and $6 million is related to reclassification of the sewer diff fees out of the special revenue funds on governmental activities into the sewer activities where they belong. Other than that, deferred outflows have remained relatively stable. Deferred inflows of resources, those changes are pension-related obligations. You see your liabilities going up by about $5.4 million related to construction activity. And then you also see that your net investment in capital asset is increasing by $24.6 million. Next is page 19 is your business type activities. You've got charges for services increased by about 8%, and some of that, I believe, is related to increases in the rates. The capital grants and contributions increased by $5.7 million, and that's related to the sewer diff reclassification out of special revenue. Your expenses have remained flat at slight decrease of $288,000. So your net cost of services have increased by by $6.8 million over the prior year. General revenue and transfers have increased by about $1.3 million, and I think that was mostly related to the transfers. Is that right? Oh, developer contributions. Right. 700,000. Yeah. And I already talked about the diff. So that's your $4.6 million you can see in column 2018 column of net income, or change in net position. The next page is really the general fund, and it's a general fund summary. And we present the balance sheet as kind of a snapshot in time. You can see the comparison of your assets from prior year to current year increased by about $4.4 million. If you actually look at the transfer detail, you'll see there was a one-time repayment of the sewer bond payment that was made from the general fund many, many years ago. You've recouped that money now from the sewer fund, and it's gone back into the general fund where it belongs. And so you see an increase in cash for that. That would be, that one-time item would go into your unassigned fund balance because it wasn't restricted money in the first place, so it's going to go back into the unassigned, and your non-spendable didn't increase substantially. Page 21 is kind of the same story. $3.7 million increase in revenues. Your expenditures decreased by about increased by about $1.8 million. So overall, revenue over expenses was positive this year for the general fund at $847,000 as opposed to negative last year of $1.1 million. Much of that due to some of the monitoring and budgeting that you're doing now and more fiscal controls. Again, other financing sources and uses, you see the one time of $4.4 million there, resulting in a total change in fund balance of $5.2 million in the current year. Next, we'll go through the what we believe to be key financial indicators and key pension information. Really, this is looking at the governmental activities, and I know I presented this slide last year. But what we do is we take a look at what the cost of services is on a government, for just the governmental activities of the city, and we compare that to the tax revenues. And the purpose for doing that is to really say, if it's costing you, let's say 40.7 million, your taxes, general tax revenue, is really sales tax, property tax, is only covering about 21.3 million of that amount, which means that there's pressure on the organization to recover costs from charges for services, operating grants and contributions, and capital grants and contributions. And so as we see pension costs starting to eke into our financial statements, we're seeing the cost of services increasing significantly between years. And that's as your tax revenues are not keeping pace with your pension and other related increases, it's squashing that, and your ratio is getting lower. So you move from 200, you had a decline of 28% from 219% to 191%. I know you're in your budget meetings, and this is probably not the first time you've had that discussion, but we do like to point it out, and you can see it here. The next slide is your unassigned fund balance to annual expenditures. It increased from 17% to 33%, 5.1 million to 10.3 million of unassigned. I want to remind you that that includes a one-time transfer of sewer fund money that was replenished. So it wasn't, it's a one-time. And so typically from a budget perspective, we always recommend you don't use one-time money to fund ongoing operations, and you use those for one-time expenditures. Your expenditures have increased slightly, 1.8 million. But you're sitting right now at your unassigned fund balances around 33%. GFOA recommends 2 months of your average annual expenditures, so you're higher than that. That's 16.67%. You're higher because of the sewer recovery. And so if we pulled that out, it would be around 6 million. You still had an increase over the prior year, and you're growing that fund balance. But as the pension keeps coming in, since much of that is related to public safety and the miscellaneous plan, you're going to see these impacts flowing through on the general fund. The next page, page 25, we like to call this GASB 68, the pension standard, and this is your miscellaneous cost-sharing pool, where we record your liability is, did I do that? 7.15% is the discount rate, or no, for miscellaneous 6.15. I'm looking right here. It should be 6.15, right? Right here. So if you go to page 97, oh no, it's booked at 6.8. So it's booked at 7.15% discount rate for your miscellaneous plan, the top number. So you can see that your net pension liability rose from 5.8 million to 6.8 million in a year. So it grew for your miscellaneous employees by $1 million. If CalPERS was to drop their discount rate by 1% to 6.15 to normalize it to their investment returns, though they've had 2 good years, your liability would increase to 10.9 million from 6.8 million. And you can see that would be about a $1.4 million growth over the prior year. And if they were to drop it by 1%, again, you would get significant savings down to 3.5 million from 6.8 million. But overall, looking at the top line at 7.15%, you're currently funded about 76.06%. And then that's not, with what we're seeing in the industry, it's not unusual. We're not seeing a lot getting higher, but people are making changes and they're trying to address the problem. Page 26, again, I'll do this a little easier because I have the footnote in front of me. 10.177 is where you've actually recorded your net pension liability. You can see it on the public safety plan. It's gone up by about 1.2 million. If we were to drop the discount rate 1%, it would go down, your liability would increase to 15.6 million. I usually like to kind of go halfway in between and say if CalPERS dropped it to halfway in between those, where would it be sitting? You can see if they drop the rate by 1%, it goes down to nearly almost half, 5.7 million. So pretty substantial changes. All of these are not within the city's control, as you can see was described in the MD&A. when you look at that first slide that I showed of cost of services to tax revenue, even the tax revenue isn't necessarily within your control other than from the economic development standpoint and generating economic development within the city to generate sales tax, et cetera, as Todd talks to you about quite often. But this isn't really within your purview to change those assumptions other than writing your legislature and attending the meetings and talking to the League of California Cities. So with that, that completes my prepared comments on the financial statements, and I can open it up to any questions at your pleasure.
Any questions from the committee?
Yeah, I have a couple. So, you went through a lot of information.
It's a lot.
Very, very helpful information, very useful information. But from a general public standpoint, I think a lot of this stuff might, kind of go over their head a little bit. So I'm going to kind of try to make a little bit of sense out of this, just in terms of what the city's potential liabilities might be going down the road, because basically this is a snapshot looking back, but it gives you a roadmap to the future if you're looking at the numbers correctly.
Right.
In particular, your pension liabilities. This is real money you're talking about here that, some of these differentials, obviously you don't have a lot of control over that. The pension fund, if they have good years, they discount their rates, and that's to our advantage. But other years, there's just no control over that kind of stuff. So the city needs to be aware of the fact that these liabilities are real money costs that they have to plan for. And they have to take into consideration that these are real money costs. But having said that, a lot of these liabilities, the CFD monies, the special district monies, they look like the city is really, there's a lot of liability there, which there is, because, you have bond liability, 20 years, you have to pay the interest off and all that kind of stuff. But in reality, that money, those separate fund budget items are actually kind of taken care of, because on your CFDs, those are costs that pay off. It's already into the mortgage payment. It's already into your payment. It's costs that are being paid off down the road, even though you have to book them as liabilities. From a city budget standpoint, in terms of operating costs to do the day-to-day job of providing what the citizens require, public safety, fire, road repairs, or whatever, kind of the general maintenance that a city, that comes from, your property tax, your sales tax revenue, fees and stuff like that, your general fund monies. In that regard, our budget looks fairly good, but again, you start taking money out of the general fund to cover those pension liability costs, that could potentially affect the services you provide, the citizens of Beaumont. We did have this recession some years ago where property values did decrease, property tax revenue, taxes did go down because the property valuations went down. I mean, the future is not predictable, but things like that could happen. But I'm just saying, from when I look at the numbers, and you look at the various pots of money that are used to support payments of these special funds and the CFDs, and then you look at the city general fund paying for the requirements that a city functions under, police, fire, et cetera. I think we're in pretty good shape, and I think people need to realize that. That's just why we go through audits, and that's why we look at numbers, and that's why we kind of use this as a roadmap for projecting, setting goals, and moving forward, as a city. I guess it's just kind of a general overview statement after, going through this whole process. But I just felt it had to be said, so. There's no real question there. More of a comment.
Any other questions?
Observation.
I have a couple, if I may.
Sure.
I just wanted to circle back to slide 23 and the cost of services as a percentage of tax revenues. And you said it fell to 191% from 219. Do you have a sense of what the current benchmark is in general for most other cities?
It varies. We do an annual survey, and I think we're working on the 2018 right now. We see this all over the board. I have one city that I presented at recently, they were at 93%. I see other cities, they're much higher than 191%. If you looked at Stockton, before it went bankrupt, it was in really bad shape. And so really, I think what's important is just the forecasting aspect of this. So this is giving you, 2-year snapshot of cost of services to tax revenue. But it's really the long-range financial forecast, which really talks to your message of, excluding the CFD and the special assessment and the BFA. When you look at your forecasted general fund, which we consider, it's the operating fund of the city. It's where you look to fund the majority of your operations that are not covered by restricted resources or grant funding, those kinds of things that are one-time or more volatile. When you look at your cost of services to revenue projected long-term, where do you see that forecast going? Obviously, cost of services, we know from the League of California Cities, they did a study with Bartel and Associates, a reputable actuary. We know that the amount of contributions required for most public agencies is going to double in 7 years, in the next 7 years, including 2018. So let's say in the next 6 years. So if your numbers are going to double, where's your tax revenue going to sit? And I know Todd's looked at it closer than I have on whether you're going to experience a doubling. But where will your how closely will your tax revenues follow? Because most of your other charges for services or your capital grants or your operating grants are reimbursable based. So you're not in it to make money. It's not a revenue profit making venture to increase charges for services. So it's a very complex formula in California. I do a lot of work in Arizona as well, a whole different formula there. But with Prop 13, and as you know, our new governor is evaluating Prop 13. I don't know if that's going to go anywhere, but the discussion is whether Prop 13 should be reconsidered and its impact on public agencies. So, from a long-term forecasting perspective, that's really from a financial discipline standpoint. You need to really start projecting out, I think, at the 10-year mark right now to measure where you're going to end up. And you got to layer in there the recessionary periods, because we know we've been in this boom for a while. And I was Stockton's CFO during the bankruptcy, and we saw a decline it had a very long trench. And what I see is we're seeing longer trenches within our boom and our bust periods. So, we thought the recession would hit now, but we don't see it yet. But it's on the horizon. We know it's coming, but will it hit at the same time that those pension rates hit? And I think that's the financial discipline that needs to happen as you're looking at your budget.
Well, what we've developed is some multi-year fiscal modeling that we've been discussing with City Council. So we've taken our general fund and our utility fund forecast out to 2035, 2036 fiscal year. So we've got that. We've also worked to model in what Beaumont's recessionary trends have been, and particularly we paid attention to what happened in 2008, 2009, and really kind of looked at that. So what our community has seen is about a 5 to 7 year kind of cycle where overall upward trend that kind of has the waves in it. So our fiscal forecasting is looking at that, looking at the cost required to maintain current levels of service, and then the opportunity to begin to layer in, which is what we're working on now with the budgets, what the need for increased level of service will be when. For example, police. We have an idea for police for the next 10 years, what we need to add and what the costs are. So as we begin to layer in those costs, then we can see what those deltas are going to be. So we've got that. We've got what I call the baseline model, which looks at that. And then another component that council asked us to develop was a severe recessionary model, where we take basically new construction almost down to zero for a period of time, and we've stretched that recession out another couple of years. So we've got some scenarios that we're pulling together. So when we present an overall budget concept to you, you're going to see about a 15 to 16 year forecast that's starting to roll those things into it, and you'll see those waves that we've tried to identify and model, kind of looking at that future forecast. And then with that, we've grown our base level operational, for example, payroll expenses, which would include all elements of our contributions, grow and compound at 3% a year. So payroll, our pension obligations, everything is escalating. So we've dropped all that in so we can show you what those look like and where those pinch points are going to come. And then objectively where we build reserves that we can go to pull down where we have those periods of time where we want to maintain a level of service and our revenues may not be keeping up due to the recessionary trend that we're in. So we've got those pictures developed, and we're working in, again, the budget forecast for next year, and then we'll extrapolate that out to run that on the same model.
Anything else? Okay, I have 3 questions that are mostly more for clarification than anything. In the comments, the statements made that the internal controls were looked at when you developed your audit plan, and I just want to clarify. So if you see issues in the internal controls, you would expand the testing that you do in order to cover for that.
If we have planned reliance, so we have to obtain audit evidence in 2 manners. One is reliance on your internal controls to give us evidence that the controls are working, our key controls are working, in order to ensure that the financial statements are fairly stated. And the other is to perform what we consider substantive tests, and those can be detailed tests of transactions as well as analytic review. So all 3 of those fill our evidence bucket: controls, analytics, and tests of individual transactions. So for example, it's easier for us to look at the State Board of Equalization's sales tax numbers that come from an independent third party and confirm those, because confirmation is our best level of evidence that we can obtain from an outside third party, independent of you, independent of us, et cetera, and use that versus us going out and looking at point of sales transactions within the city. So we look at internal controls from the standpoint of determining how we're going to test that account. Do we do a detailed test of transaction, such as a confirmation process? Do we do an analytic of your sales tax? Or do we rely on the internal controls, meaning we have to test it to a level of reliance, either low, moderate, or high? Now, we can get into control structures and the design can be flawed. And in your case, you were, during 18, design, there, in my mind, when I look at the audit, there are still design flaws because your policies weren't fully vetted. Certain processes weren't in place that I would deem to be key controls, such as segregation of duties. And so we repeat those. We don't rely on those controls that are carrying forward that are deficient, because we're in this catch-up mode here at the city. We're going to take a completely different audit approach. We're not going to rely on that. We still are required to look at the design and whether it's been implemented. And the answer is it had not, or it had partially been implemented. And then we have to modify the other side of the approach, meaning we're going to do more detailed tests of transactions or more analytics that are more robust. Does that answer the question?
That's it.
Okay.
I wanted to make sure that that was covered. And then you mentioned that you provided some assistance to the in preparing the financial statements. Was that substantial, or was that more of unusual technical things? How involved were you in that? Was that just a minor help as opposed to having to provide a inordinate amount of assistance is our finance department getting to the point that they're independently capable of handling the work?
Yeah, it's interesting because we have a lot of cities that'll come to us because of resource constraints. So though they're capable of performing the procedure, they're just limited in staffing. And they just, with all of the requirements that are placed on a finance department, they need our assistance to help prepare the report. What I want to express is that you have a financial reporting system that spits out trial balances, and it's kept on a fund basis. And we take that information, we actually import it into our trial balance software to produce the final numbers. And the audit adjustments that you see here are the ones that were made to get it into its final state that you see before you. So from the standpoint, is your financial system operating enough sufficient and recording, processing, and collecting the data during the year in order to get us to these final numbers? Yes. And what you'll see is a lot of the number adjustments that are in there are related to accrual type things. An actuarial estimate is an estimate. It's an accrual-based number that goes into the government-wide. So if you were to start at your fund statements back, you'd see, if you look at the detailed trial balance, relatively most of those numbers are unchanged. The disclosures roll from the prior year. We do take into account any new GASB standards that have been implemented in the current year. We do assist with some of the drafting and the footnotes of those. But generally, it's a collaborative process on that. Milana will take a first stab at it. She gives it to us. We review it. We send back required language or anything. And then we go through our disclosure checklist to make sure that it includes all the required components.
And so the takeaway from that is that our staff is adequate and doing a good job. You're just tweaking the technical
Yes.
parts to make it fit.
Yes, she'd probably like another body, but yes.
And then the last question is, we keep hearing that our audit date is being missed. Is there a specific date, and who regulates that? And what are the ramifications of our missing that?
That's a great question. So you are, if you are subject to a single audit, have a filing report date with the State Controller's Office of March 31st, because the only thing that they regulate and have oversight on is your single audit. And this year you have a single audit, so that has to be filed with the State Controller's Office by March 31st. It's 9 months. It's due 9 months after fiscal year end. Single audit is due across the country. It's not just you. So across the country, it's due then. For missing dates, we were later than that last year, but you didn't have a single audit last year. As you recall, you didn't have enough federal awards to meet that requirement. So technically, as long as you got your financial transactions report completed and filed with the State Controller's Office within their time frame, and this year it was January 31st. January 31st. They extended their deadline to January 31st. It used to be October 31st. Now it's January 31st. As long as you got your financial transactions report in on time, you were good, because then you weren't on the bad list on their book. And so for financial reporting purposes, you are filing your report timely. Filing it timely this year, the single audit gets submitted to the Federal Clearinghouse. That was submitted on time on a data collection form. It was due March 31st, and it's extended automatically by the feds to some unknown date if the 31st falls on a weekend. I sent her the information on that. And so it's really just an automatic granted extension on those. So, yeah.
So that statement that's been made, or that we make, that we're late, is relative to the context that it's in. We're not out there being bad, and we don't have horribly late audits and reports, correct?
You have your date, Liz. In the past, they have been
Yes,
late.
they have in the past.
In the
but
past.
We've moved beyond that.
Right.
We've accomplished that goal.
The filings with the state, California, and the federal, and any other of the special agencies that we have funding from, all of those filings and reportings are being done on a timely basis.
Okay.
And I believe your bond counsel is assisting and continuing disclosure for your bonds.
Yes.
Right, we have a checklist for all of the continuing disclosure. We know which bonds are due when and the whole, we're monitoring all of
I
that.
think it was important that we note that we did not miss those deadlines. We may have internally wanted that audit a little earlier, but we haven't created any problems with any regulatory agency.
Typically, the flow is about 6 months after year end. A draft or final will be done in December timeframe, with the final report coming to Audit Committee and City Council in January. We'd like to have met that this year. The CFD transaction was one of the more complicated transactions, and so it took us a little more time to get our arms around, along with the party settlement, get our arms around that and get it right. And we wanted to make sure you had a final report in front of you.
Thank you. Any other questions? Yes.
I have a comment on the date. So last year, we were in August, and, correct? So we have moved up considerably, if you count the months, so we actually could even move up considerably next year and be on time by the end of December and January?
I think so.
Yeah, I don't see any, because we were really recovering still last year.
Yes.
So I see speeding it up now should not be much of an issue, since all of those communication links and adjustment links have already been put in place. I would think the next one would be no problem to move it up 4 months, right?
Yeah, we were engaged late last year for the 17 audit to conduct that audit, and so that put us a little further behind. But by being able to come in for interim earlier and doing planning and interim earlier this year, I think that helped immensely. And I don't count April yet, so we're 4 months earlier than really we were last year. We did have a draft much earlier than that, but we weren't completely done, and we went through the series of drafts, and we just made a decision this year. We wanted to have a complete financial statement.
So I'm going by your 4-month improvement plan. So we're in April 1st, and we just move it ahead 4 months for next year, right?
Well, I think,
right on
yeah, I
time.
think that, well, if you decided you wanted to go for the GFOA award, they're due December 31st.
Okay,
Okay.
all right.
think
And I do
this-
like the new format. I think that.
You do.
I like it very much.
I was going to say, Ms. Burke did guarantee that by the end of November, we would have a CAFR, I think. Guarantee.
Capper.
I thought I heard that
I-
also.
Yeah.
I'm gonna need a few staff, not one,
Yeah.
I'm gonna need a few. I need a little help on that.
Thank you.
Some comments on.
Sure.
One of the things that I very much appreciated was both when Milana brought us back to that a lot of our internal control issues were raised first with the state controller's office. And we did a checklist. This committee did a checklist on that, and we tracked that. And we ended up with some of them that sort of crept over because they were software related, et cetera. And we have, because we're at this point in time where we're really going back to June of 2018, when we look at the internal control picture as it is in this particular report, I would like to see this committee take that same state controller's report approach that we took with the checklist and an update and tracking and when it was completed, et cetera, and sort of pull it all the way through from the state controller's office to these findings to where we are today, so that we would get a solid picture across the committee of exactly what we have that's still open. And I'll address this to the chair. I would like to see us do it. Last time we did a subcommittee that did that, and that worked well, and the subcommittee actually had to report back to the rest of the committee here on that checklist tracking and verification, and worked with finance to make sure that that was properly examined and recorded and tracked. So I'd like to address this to the chair, that we do a subcommittee approach, maybe with only 2 people or whatever from this committee with tracking and communicating back, especially too, since we have some new members. We're doing that kind of tracking as follow-up on this.
Okay, does that,
Do you?
okay, we serve at the pleasure of the city council. And so, of course, there's no issue, but we're willing to do that. Does that need to be done through a motion, or do we just do it as part of what we do?
That doesn't need, in my opinion, approval of the city council. We did it last time without that. And the city council, in my opinion, correct me if you have any other understanding, within our work, as long as we're not doing something that's outside of what we're directed
Right.
to do, we can organize and do it as we see fit to accomplish what we need to do. So I would sort of hand it over to
Okay.
you at this point as a suggestion.
Yes.
I have a comment. I'm not quite understanding what you're asking. I know the list that was generated from the state audit caused us to have a list generated, actually it was generated by the state audit, and it became a matrix for us to follow initially as a committee to make sure that we're addressing the current concerns of the state, because obviously we wanted to be in compliance. Are you suggesting we take that same list that was given to us by the state auditor and reinstate that as a continuing checklist?
Well, let me
Because most of it has been completed. I'm pretty sure
All of it has.
all of it, basically. So
Well-
what kind of matrix are we
Well,
looking at?
let me rephrase it and see if
Okay.
that makes it clearer. Actually, we weren't giving a matrix by the state controller's office. We were given a report. And the report had findings in it. And then what this committee did is this committee decided to develop a matrix and a checklist. So that's why it ended up to go from a report to a clear pattern that we could follow.
Right.
And then within that checklist, we actually made sure that there was sign off that it was completed, and we
Right.
had dates, et cetera.
Okay.
So it isn't that I want to reinvent the wheel and start all over again with the state controller's findings, because they didn't give us a matrix. What I wanted to do was take that where we were. Did we actually finish every one of them? Do we know that? Are we comfortable saying that those findings were put to bed, or are we not comfortable with them? And then we have new findings that relate to this report, and then putting them in the same type of accountability checklist where we would go through and now track these. If they're all done, they're all done. We could say that. But if 2 of them are left or 3 of them are left or whatever, then it would report back to this committee that we have 3 that we need to be working on. I'm just making up the numbers just to make a point. And so that then this committee would know the state controller's office findings, exactly whether we are allowed to leave those behind, they're done. And then whatever findings still need to be discussed or worked on for this particular year that are a result or a byproduct of this report, and then finally get to the point where we say we are done.
Correct.
And the committee would feel like it had done its job on tracking every finding that, does that help, Richard? Does that make it more clear?
Well, I think we're going to rehash what we've already done about a year and a half ago, is that we really completed that. From my perspective as a committee member, I thought we completed that. It was all checked off.
I think it was reported back to us that it's been
Completed.
completed.
Now, if we want to take another look and pull out certain things that we think are important enough to continue to track, that's fine. Or if we want to look at this report, and you want to get a committee or whatever, that's fine. Look at this report and create some new tracking items, that's fine too.
Well, let me tell you why. First of all, I don't want it to, and I apologize.
No, you're fine.
I don't want it to be a big rehashing of what we did before, or a whole resurgence of the whole state controller's report, et cetera. But there's a reason why I'm asking for this. And the reason I'm asking for this is that we've been told by staff that they're done up to a particular point. We've been told by our auditors that there are some findings. And this particular committee, you're not on anybody's payroll. You are an oversight committee of the community. You're all on this committee because you have a good understanding of accounting and what needs to be done and tracking. So that's like an independent blessing or needs to be done, or here we are and here's our last couple of action items. I view you as an independent oversight committee, and that's your role. And when you look at the definition of who we are, that is what the role is here. And we as council members have no more weight or pull than anybody else on this committee. It's really a citizens oversight committee. So that's kind of why I'm asking for it, because that would be citizens or independent oversight that looked at everything that came from the state controller's report, looked at what came from our current audit report, and said, here are a few action items, or here are the things that are finished. And that's why I bring it up.
Yeah, just a verification, and I would assume that, well, hopefully, maybe that would always go away, but there's always the potential that there'll be something from our own auditors in the future. We have a list of things here that we've got that they're being handled, and this would just be this committee outside, not paid by the city, not paid by the auditors, to just say, yep, it was done, and what we had reported back to us is accurate.
Yeah, I don't want to, beat this to death, but we have created our material weaknesses list, our significant deficiencies list. We are now tracking that. If you want to go back and pull out that matrix that was all set up based on the findings, that's fine. Do a quick review of it to see where we're at. Carry forward anything that may be to the betterment of the community and the city long-term. That would be fine too. I have no problem with that.
I think, Chairman, I just want to put my 2 cents in. I think it's a good opportunity it allows the committee here to keep moving forward, and then this small subcommittee of a couple of people can kind of keep looking at that as we're going forward with other things, and then bring it back to us without us having to hash it over.
Makes sense. Yes.
Right.
And my comment is, and something the guy on the block, is if I've got the right one there, is we checked off that list and we completed all the items on that list, but now we need to make sure that those items that we checked off, that what we designed works. We need some feedback. We had all this fraud training for our people. We need to have some kind of feedback along the way. Is what we did working?
So let's have
Valuable. That's what I think where Nancy's going is.
Right.
It's one thing to write a policy. It's another thing to make sure it's being followed and it works. So that's my comment.
Okay, so, yeah, I think we're in agreement to that.
I'd like to see the chair and the treasurer on that committee if we.
That would be my proposal.
Oh, good. Anyone?
Anybody not in agreement with that?
No.
Okay.
Can we do this? This really wasn't agendized, but it's also part of the discussion of the budget, so I guess we're legally okay.
I mean, it's not a formal action, it's just that. And at the end, when we say an agenda item for the future, we could bring it up as a future agenda item for you to come back to us and
Report, yeah.
summarize what you found.
And what we did, okay.
And if it is, we can bring it for.
Yeah, if we're,
You're creating a subcommittee. I would think that would take some action, but I'm not a legalese on
But we
this.
did ask all in favor, so.
I have a question back in, because it really gnaws at me, is the pension liability. It's there, and I see all the things you're looking at in the future, but is there any solution to it? I mean, yeah, the tax base could increase, but then the number of employees increase, and it's gonna go out, and we're gonna have recession. How do you get ahead of this thing? What have you seen? Has anybody had a similar experience, and any of your clients that have been able to close the gap?
Answer that, you're a millionaire.
Yeah.
Well, I'm just saying,
You know,
we
it's
can sit here and say,
yeah.
we checked everything, but it's still, the gap keeps growing.
Interestingly, the state of Connecticut is selling its non-essential assets to its pension plan as part of its funding mechanism. Selling it to the plan. It's giving away its non-essential assets to the plan because it has large land holdings and things like that that have value that were sitting on the books of the city and going unused, and they took a creative approach, and they're finding that others are looking at that. Obviously, a city can't, in California that's in a cost-sharing pool, it isn't a single employer plan, can't do that. The state can do it to itself, but because you're part of a cost-sharing pool, you're part of the mix of all the rest of the other agencies that are within that cost-sharing pool. And absent modifications that are done legislatively in the public employee retirement law from the standpoint of benefits and PEPRA, and that we don't see that PEPRA change rolling through for some number of years. But I think some agencies are setting aside, they're using the 115 plans at CalPERS, they're trying to get ahead of it. They're trying to prepay costs, but I wouldn't recommend that in a cost-sharing plan, because if you prepay, you're just funding everybody else in the pool early. But some are looking at the 115 trust as an option if they're in the cost-sharing.
Well, and we're in the early stages at the staff level of investigating that and looking into various options. The 115 trust is one. We've had some early conversations with our financial advisor to maybe look at some other options and things that they're looking at with their other municipal clients as well. One of the things I will say is our conversion to PEPRA is happening faster than a lot of other cities. We don't have a lot of legacy employees and a lot of legacy costs. We don't have OPEB. You know, there's a lot of things that we don't have. And, you know, we're sitting at close to 77% funded on our pension liability, which is I can't quote the numbers, but that's probably a little bit higher on our level. But the unfunded liability for PEPRA is significantly lower than that for the PERS Classic. And so our major element of our PERS obligation, our unfunded liability, is on the public safety side. I mean, that's where our largest, you know, legacy costs, and they've got the most advanced retirement benefits that are out there. But some of the options we had to look at are the 115 trust, looking also at other mechanisms to set up that don't require the trust to be established, and then looking at other program adjustments that might be available to us. There is a significant cost to getting out of PERS. So we're also talking with PERS about, you know, what that looks like and what that means in terms of the direct and indirect impacts of that decision as well. So again, we're at the very early stages of trying to evaluate that and look at what our options are.
Okay. Need to open this to public comments for this agenda item. Yes, no? Okay, we have no request. All right.
Steve, may I just make one quick comment?
Yes.
Would it, given Richard's concerns, would it be wise to simply table the idea of the subcommittee to the next meeting? To have it put on the agenda so it's formalized and so the T's are crossed and I's are dotted?
I think we're okay to run with what we've done. We've seen these done in the past and similar things done. I believe that they've had buy-off from the city attorney on the same type of things. I think let's go ahead with it rather than drag it out. And if the clerk or Barry or even the mayor or Ms. Carroll get some feedback from the city attorney, then we can go that route.
Can we stretch it?
No, I don't think we are. I don't think it's a subcommittee within a committee. We didn't give ourselves any extra powers other than what we have already. So if I were
it's
to,
nothing that's legislative, so.
well, if the focus was out of the focus of the original committee, then I would say yes. But we're still within the parameters of our committee, so I don't think so.
Yeah.
Chair, I would say that the item was to receive and file the audited statement, and within that item, there wasn't any presented discussion of creating a subcommittee within it. I don't think it would hurt to create an agenda item with that recommendation.
Okay,
I agree with that.
so, yeah, let's add that,
Okay with that?
let's add that when we get down to the future agenda items. So let's go on to number 5, which is the February 2019 financial reports to receive and file. Do we have a report on that?
Did we make a motion on that receiving file?
I don't think so.
No, that's correct, we did miss that. So we need to have a motion to receive and file the,
Are we done with the discussion?
yeah, the,
Did anybody else have any discussion?
I just had one real quick,
Discussion? Questions?
I had one real quick question.
sure.
This may sound really stupid, but unrestricted net deficit. It kind of sounds like an oxymoron, but unrestricted net deficit on your, I think it was on your summary, page 3, under other matters. You had city's government activities had an unrestricted net deficit of 7.5 mil, including a net pension liability amount of 15.75 million or 15 million related, and net deferred outflow parentheses inflows, which does that negate plus minus is 0? I don't know, of 2,200,000. The city's government activities had a positive unrestricted net position of 5.9 million. I was trying to make sense of it. It just went right over my head.
This is on,
I think it was on page 3 of the letter to the honorable mayor and member of city council.
The required
Oh, it's in the
communication
staff
letter.
report?
oh, in
Oh,
the
it's in the
staff
staff
report.
report.
Staff report, okay. I just want to know what defines, I've never heard this term before, what defines unrestricted net deficit?
It's unrestricted in that it isn't restricted for any specific significant purpose. It's unrestricted, it's upside down. So it's a deficit and it's not a positive balance, but it's unrestricted, and eventually you fill that.
Is it money somewhere? Could you give me an example of what an unrestricted fund would be that would be a net deficit?
That would mean we don't have enough cash in the unrestricted. We don't have enough assets unrestricted when you offset the liabilities for the unrestricted to cover that net difference. That's what that means. But that's just looking at the unrestricted portion of all of the city's various funds. Some of the funds are capital funds, some of the funds are restricted funds, but the unrestricted ones, because that's where the pension liabilities also land, it's causing it to be upside down.
Okay. So the positive unrestricted net position, 5.9 million.
That's
Everything
Everything.
covers everything under that
whole
terminology there. Okay. Thank you.
Any other questions? Okay, looking for a motion to receive and file the,
So move.
a second?
I second.
Any opposed? Okay, then it carries. Now that allows us to move to the item number 5, the February 2019 financial reports. And we have a staff report on that. Okay, we're gonna let our auditors go and thank them for their time.
Thank you very much.
Thank you very much.
Thank you.
I'll see some of you tomorrow.
Bye. The next report on the agenda is for the February financial statements. And it doesn't show a lot of difference really from the way January landed. We have the same timing issues for the billing on the utilities, the way it was posted in the previous year, which is throwing the timing off. So I also included that variance in the back, the same as I did last time. But it shows that we're consistent. We have a lot of consistency from this point last year to this point this year. And we can see where our growth is, and we can see where some of the changes are occurring. And we've had a little bit of budget adjustment. We did some mid-year adjustments to try and take some of the changes into account. And we recently had one more budget adjustment that we will be integrating into the next financial statement. But it appears that our funds, sources and uses are on target for our budget for fiscal 19.
Any questions, comments? This is pretty straightforward.
And you're going to receive the next revenue, tax revenue stuff when?
The next big installment will be in May.
May.
Okay, there's no questions or comments. A motion to receive and file.
I move.
Second?
Any opposition? Okay, then it carries. Moves us to the next item, which is future agenda items. Do we have anything that is on the future agenda items from the clerk's office?
Just the item that you tabled.
Okay, so then what I'm seeing is
Another one.
okay, is the tabled vice chair. We discussed having a report from myself as to what the responsibilities of this committee is, and by statute, and that was primarily because of the new members. And we have another comment.
I had a suggestion for the agenda for next time, and I think it's timely maybe that we put it at the next meeting, and that is that I would like to get a timeline for next year's audit and get it on the agenda for approval by this committee or review by this committee and input on it, so that maybe we can move it up 4 months or more if we're going for a CAFR. And I just would like to sort of formalize the timeline. And I thought if we put it on the agenda, that would formalize it and raise the visibility of what the expectations were in the timeline. And put in there also cushion so that we have time to review the reports beforehand and make what we hope is a realistic marching timeline with padding in there so we have plenty of time to review the report and to bring up issues or whatever needs to be done, rather than the informal way we've been kind of
Okay, I think
talking
that
about it.
pushes back on Milana. Can you prepare something? Give us an idea of what's realistic, what resources, if any, additional resources you would need in order to do that, and then we can look at it and whatever input you may need from the city manager's office as well, and then we'll have some ideas at that point, and we can determine.
I'm trying to think how we would word that to make it. I like the idea because it sets a
You want to see
target.
how I put it in my notes?
It
Let's
sets
see.
a target date, so that's good. But how do we word
This
that?
is what my
Okay.
suggestion to myself for tonight. In May, was going to ask for an agenda item to talk about a schedule for a calendar for next year's audit. How we would stay on top of it, how would we get review time put in there, and maybe we have, I guess that's how I was going to, I'm losing my voice,
Okay.
but that's how I was going to
How
suggest.
about an agenda item specifically stating a calendar for, and put a
Right.
date in there, and then we'll review it and approve it as a committee.
So that would mean you'd need a calendar from the auditors, right?
Right, I'll work with the auditors as far as timing for their interim field work, final field work, time for preparing the review documents and all of that. See if I can work with them to come up with something that we can solidify and then have an expectation.
Maybe if they know we have this expectation, they'll put us up higher on the list.
Well, see, my reason for bringing it up was because what we have been doing in the past, I don't want to put it just on Milana, because because what we've done in the past is we ask her and she tells us what the timeline is. So I would like it to come from the auditors, what the timeline is, in writing, that then we can put as an agenda item for this committee to review.
Okay, great.
Because we keep putting her feet to the fire on the timeline, and I want to back it up so that we get in writing what the expectations are, what the cushion is, when we're going to get it, and make sure that we're comfortable with that timeline.
Okay,
Because otherwise, we just talk about the timeline.
yes.
May I make a suggestion that maybe a simple Google search or whatever to see what others are doing? I know what states are doing, and I know that what people think is happening and what's happening are this far apart.
Right.
And if we can come up with that with cities in California as well, and make sure that we're not looking at an unrealistic time frame, or that that we're not putting something out there that's way too generous of a time frame to get it done.
Oh, I don't intend to be generous.
No, but we want to be
Realistic.
realistic.
Want to be realistic, but you know, absolutely, you can see what
yeah,
that would be.
and absolutely address the resources that you have or may need in setting that up, so that we have something to look at other than this is what my hopes are. Yeah.
Right,
Well, as a committee, the recommendation, we want to shoot for what, December 31st?
November?
December?
but they won't even be here to do the field work until November. And I know that that's probably not going to be something that can change, so that, just because of scheduling in general. So I think December is probably our wish list, is that we have it at the end of December, but also knowing that that may or may not be realistic. The timeline expectation I had for this one was that we would really have a final draft the end of January, mid-February. And that really was what we were shooting for. And I don't think that's an unrealistic expectation.
We have one more year on the contract with the fund group.
Correct. And it has 2 additional one-year extensions, but only with the authorization of city council. So the contract itself has one more
And
year.
that may be good to have so that we know where we're at and where we may fit into their scheduling.
Melania, what I'd recommend is, ideally, we'd like to be at the December. You said, why not? Just sit
Yes.
down. You're the interface here. Just sit down and see, that would be our goal.
Right,
And
absolutely.
based on this year, where we are, how close can we do it? See
Right.
what it'll take from their part, and then you'll see if you can meet it.
Right.
I'd say this is good discussion, and we probably need to defer any more discussion until we bring this up as an agenda item at your next meeting. So
Yeah.
we're a little far afield on our agenda. Yeah, we'll agendize this.
Get it on the agenda.
Great
Okay,
conversation.
so we have those 3 items. I don't think we need any kind of a motion or anything, just the notation that they're there.
We'll also have the March financials to review, and that'll be a quarter, so that'll be the quarterly reports.
Okay? And the next item is the finance director's comments.
It was a long time to get the audit, but we have it, and I'm pleased with the results. We're just working through the differentiation between recording the funds in the way that we need to see them from a daily operating perspective, and then having them converted into the proper reporting methodology. And I think we've gotten that, so when we get through the next year, we should have significantly less audit adjusting entries. And if you look at the detail of the entries, a lot of them have a net effect within the funds that really is a zero. It's just a matter of moving it from here to up here, or from here to maybe down there, and it's just realigning them so it'll be more in tune with the actual audit reporting itself, the mechanism. So I think we're right there. I was really happy with the report when we finally got it. And I was very pleased to see there were no new internal control findings. So The staff has been working really hard at making sure that we follow all of the guidelines that we've put in place, and following our monthly checklist has helped. And as we go along, we find little things that we need to add. And so that is a living document. We add things to that all the time. And we're starting to write out some of the more detailed policy procedures, things that we do that need to be in writing, because if you ever have anyone come up behind you to do that work, if you don't have some of that written down and documented, they don't know where to start. And that's really the kind of thing that I was thinking that the committee would be moving towards next, is some of the more detailed operational internal controls, and making sure that we haven't skipped anything. Being in the middle of it every single day and just dealing with it over and over, sometimes you miss kind of that outside perspective. And so that's really what I was thinking would be kind of the tone of the committee going forward.
Yes.
Milana,
Yes.
I want to thank you. This has been a speed trip through the early days when you came in and there was rudimentary, to put it nicely, finance department, problems dropped in your lap, incredible scaling of hills and mountains to get where we were last year on the audit. Unfortunately, it gets a little tainted when it comes a little bit late, but I don't want to undercut the quality of the work that you've done to bring us to this point. When we see simple things in an audit report like segregation of duties, which we all know is a really nice thing, and it's great when you have a cast of thousands, but you have incorporated within your limited resources so many of the internal controls and so much of the reporting to get us at the point where we have an unmodified opinion and we have a structure that actually fits a CAFR. That structure of this audit fits the CAFR guidelines. And we're on our way to getting that CAFR. And I want to really thank you for your part in your incredible hard work in helping to do this.
Thank you. It has been, at moments, quite enlightening.
And you don't always get complimented on it, so I wanted to make sure that I told you how much your hard work's appreciated.
Thank you.
Let me just add my 2 cents as well. In my employment, I looked at hundreds, maybe even as many as 1,000 organizations to see that they had internal controls, that they were functioning, doing what they should do. A lot of them that had small problems simply ceased to exist. Some of them made changes and went forward. When I first moved here and heard horror stories, which might have been a little exaggerated, but may not have, I was somewhat reluctant to look at this committee and volunteer with it. But all I can say is that 10, 15 years of experience of dealing with helping places fix the problems, for me, I would love to claim this as a success, but it wasn't. It was yours and your staff's success, and all this committee did is just kind of prodded and looked at what you had and gave you some indirect guidance. And I think you need a lot of feeling of self-satisfaction above and beyond anything that the city council can give you.
Thank you.
I'm very comfortable now when approached by neighbors and talking about the horrible city and the stuff the city does. I'm very confident to say, I really don't believe that happened. Let me look up and get back to you exactly. And it's very nice to be able to say that now.
That's great.
About anything that's happened in the last real short period of time.
But I do have to give a lot of kudos to my staff. I mean, they've had to pick up and learn, and they work together really well as a team. We have a good structure. Without all of them being cooperative, we wouldn't be able to do some of the segregation of duties, which are a little bit odd, but because there's so few of us, they do a really good job. They stay on top of it, and I really appreciate all the effort they put into.
Yeah, that, yes,
Can I share an announcement?
absolutely.
Okay, there's a press release from State Treasurer Fiona Ma, who is starting a financial empowerment to local elected officials training video, a whole series of them. And this was emailed to me from the League of California Cities. So I would like to ask Nicole to share it with all the committee with the link. Did you get this? You didn't get it? I'll forward it to you. Okay? But it has a link to where you can go to see what the videos are, and this is the first one of a series of 9 that they plan on doing. So, and this is what you need to know before issuing debt. So that's the first one.
Oh.
So,
Ooh, start with the big one.
I know.
Wow.
I know. So I think it's a great idea. I really think it's great that there are going to be these videos, and I think that you should all at least be aware of where the link is, so that you can follow the video series and look at it.
The league put that together? League of Cities?
Yeah, I'll send it to Nicole and she'll distribute it to everybody.
Excellent. Okay, then the last item is the meeting review and the treasurer's monthly report that will go back to the council. You're looking lost.
No,
Oh, okay.
what I'm gonna say tomorrow?
Yeah, basically,
Yeah.
the highlights.
Well, the first thing on the February financials, we're on target. Our financials are on target, and the same problem that we had last month, the timing issues are there, but when I look at the budget, it's on target. We're not gonna do it. Oh, yeah. And the audit, there's been good improvement, especially with the team and the staff, that now they're getting the hang of it, and things were easier in the coordination, and things are working better, the buffer between the two of you. And it might be a staffing issue that we may need to address in the future,
Right.
potentially,
Right.
to make things work. The general funds are on target, but, we have the liability sitting out there with the pensions. Otherwise, the general funds look pretty good. Internal controls are not fully implemented, but they're moving in a positive direction. And we are on target with reporting deadlines. Maybe
Absolutely.
we're not happy, so I wanted to put that in there because there's people thinking, because we didn't get the report, we did meet interim deadlines that we needed to fulfill obligations.
Correct.
Okay? Sound good?
Yeah.
Great.
Any comments before we adjourn? Okay, then we'll adjourn this meeting at 7:53. And our next meeting is May 6th at 6 p.m. Thank you for your